CNBC TV 18, celebrating 16 years of business leadership.
Good afternoon. Welcome to Markets Today. I'm Lata Venkatesh.
I'm Surabhi Upadhyay. Let's start with the headlines. The market closes at a one-week high ahead of the crucial Fed meeting. The Nifty gains 50 points to close at 7750. The Sensex nears 25,500.
M&M sits out of the Bulls' party. The stock falls over 5% as the Supreme Court bans registration of diesel vehicles bigger than 2000 cc in the National Capital Region till the 31st of March.
Chennai floods sink Wipro's third quarter outlook. The IT major says revenues are likely to be in the lower half of its guidance band of 0.5% to 2.5% growth.
Bank stocks have a good day with the Bank Nifty gaining 1%, but CNBC TV 18 learns that higher provisioning norms for loans given to discoms as well as accounts put under strategic debt restructuring could be in the offing.
Global markets largely in the green as traders count down to the first US rate hike since 2006. Well, those are the big headlines, and Lata, I guess it is indeed all about the Fed and all about what Miss Janet Yellen might do tonight.
Yes, it is, but looks like now that's the story of the past. The manner in which Europe rallied yesterday and Asia followed suit today emboldened the bulls in our country as well, in our markets as well, to cover shorts. So you saw a major short covering rally, and precisely those stocks that have been the weakest in the last 2 or 3 weeks were the ones that gained the most, oil stocks and the private banks. But we must remember that there is still a percentage of shorts left, and so much will depend on the language of the Fed.
Well, that's today's action. Now let's tell you what we're getting for you on the show. Saurabh Mukherjee, CEO, Institutional Equities at Ambit Capital, weighs in on the market action, while Rhythm Desai of Morgan Stanley and market expert Amit Chandra talk about the impact of a possible Fed hike in the Indian market. Also on the show, CP Gurnani, MD and CEO of Tech Mahindra, says that there will be an improvement in margins by the time the Pininfarina deal closes, while Raghav Chandra of NHAI details the company's fundraising drive.
Well, but first, Dalal Street, it's going into a crucial session with the Fed about to announce its decision, but it has gone into this session with optimism. Short covering rally continued, even though the gains were capped. Anuj Singhal is here with a wrap of the day's action. Anuj, tell us optimism ahead of the Fed, but this is a to-be-continued story.
Oh yes, the market went into the event with a bit of a bullish stance. In fact, for the last 3 days, the Nifty has been gaining 50 points. So the gains were capped, but there were gains. And again, it was a short covering bounce, as you could see with the profile of stocks which rallied, with ICICI Bank being the top contributor. So it was a short covering bounce, but the market is heading into the event believing that the worst is over, and tomorrow morning the market should rally. That's the belief of the bulls, and that's the belief which is visible on the ticker right now. Look at the stocks. ICICI Bank up 2.5%, Infosys was up 1.7%, and Bharti Airtel was up about 3.5%. Apart from that, you had some other nifty gainers like ONGC, Kane India, both of them up 4%, and Power Grid was up about close to 3%. Pharma stocks did well today. Lupin and Pharma, both of them were up in trade. Lupin up 2%, Sun Pharma was up 1.5%, and BPCL was the other prominent nifty gainer, up about 1.5%. On the losing side, M&M clearly was the story of the day. The story of the day was from the capital, with Supreme Court banning the new diesel vehicles at least for 3 months with a particular CC amount, and that's what you saw in Mahindra & Mahindra, down 5.5%. Asian Paints and ITC were the other big losers. In the mid-cap space, then, lots of big winners. And again, continuing with that theme of the Supreme Court order, the biggest beneficiary was IGL, up 6.5%. Everest Canto, that makes cylinders for CNG, that was up 14.5%. And P-Power Defense was backed by news that Reliance Infra open offer was over, and that stock was up 18%. And finally, we had Praj Industries, SH Kelkar, and Bhushan Steel also gaining in today's trade. So, big day coming up tomorrow. Of course, the big event coming up tonight, and that will have quite a bit of bearing on the market tomorrow morning.
All right, Anuj, thank you so much for that. And of course, after market hours, we also got news that Mahindra & Mahindra saying that only 2% of their monthly sales will be impacted by the Delhi ban. That stock ending down over 5% today. But now let's get you some market opinions. Saurabh Mukherjee of Ambit Capital says that if the Fed hikes rates, FII equity flows supporting the Indian market will become a story of the past.
Normalization of US monetary policy resulting in risk appetite globally reducing will continue through 2016, and that obviously has that obviously means emerging market equities and Indian equities will face pressure from FII outflows. Emerging markets as an asset class will face redemptions, and hence FII equities flows supporting the Indian market I think will become a story of the past.
Well, the wait is nearly over. Later tonight, America's central bank will announce whether it has taken finally the plunge and raised interest rates for the first time in nearly a decade. Today's Federal Reserve decision is the last major financial event of this year, 2015, and it's fair to say all eyes are on the Fed. If rates are hiked today, Fed Chair Janet Yellen will probably take a dovish tone, we understand, when she addresses the media at the press conference and in the accompanying FOMC statement. A CNBC survey shows that many are expecting 3 rate hikes in 2016. CNBC's Steve Leisman is here with an analysis of the characteristics of the Fed governors and the composition of the FOMC in 2016, and hence what to expect.
Because it's the first one where we start to look through this coming rate hike. Let me dispense with the news. First off is that 95% of our 42 respondents, you can see that right down there, they expect an increase tomorrow. So a lot of this survey, the results are, what does Wall Street think is going to happen next? And let's start right away with the big question, how many rate hikes next year? What you can see from this chart is there's not a lot of consensus. Will it be 1, 2, 3, 4, or 5 hikes? 29% say 2, 29% say 4, 21% say 3, and you've got people on the 1 and 5 camp. That's what makes the Wednesday statement so important. We'll be looking for whatever guidance, of course, and the press conference, whatever guidance we can get from the chair about what happens next year. Our median is 3. It's the beginning. We'll see how that changes over time, both from the guidance and as the economic data come in. Now let's take a look at the timeline and see how that's changed. Come over here. December, in the prior survey, we were looking for rate hikes in December. That hasn't changed, of course. Now, the next most important, when is the next rate hike? New entrant here, that is expected in March on average for our 42 respondents. Balance sheet decline had been November 16. That's pushed ahead a month to December 16. That moves around this area here. So about a year out, the expectation now is that that $4 trillion balance sheet should begin. The Fed should allow it to decline. Finally, the terminal rate had been the third quarter of 18. They pushed that a little closer, but brought the rate down to 2.58. So this is seen as a very shallow rate hike cycle over the next couple of years here. Last thing we want to show you here is the path of the funds rate. And what's important about this chart is look where we started 2015 with an expectation that the funds rate would end the year as high as 1.8%. And look where we are now, an expectation we will end 2016 0.9%.
Okay, so those are toned down expectations of just how much the Fed can hike over the next couple of months. CNBC TV 18's Menika Doshi spoke to Rhythm Desai of Morgan Stanley and Amit Chandra, independent market expert, about the impact of a possible rate hike on the Indian market. Here's what these experts had to say.
Will markets in India fall for a sustained period of time because of this? Will the economy be hurt specifically on account of this? What will happen to the rupee on account of this? You have 30 seconds to answer all of this, so you have to be specific.
Let's talk Thursday morning. Assume the Fed hikes. I think the market will rally.
The Fed rate hike is going to be a non-event. It's going to be a complete non-event for a couple of reasons. I think one, markets have broadly factored this in. They've known what's coming. They have the range of outcomes, and I think they've been, they've done what they needed to do. I think the Fed is run by highly competent people, and I think there are folks sitting outside who are worried about them doing something silly, when actually if you look at generally their record, I think they've generally been a very responsible central bank, and so I don't think they're going to do something which is going to, bring the world into crisis.
Well, far away from the Fed, in a landmark judgment, the Supreme Court of India has cracked the whip to clean up the national capital's toxic air. The slew of measures announced today included a ban on registration of diesel vehicles running engines bigger than 2000 cc. A 100% hike in green tax on trucks has also been imposed. This ban will be imposed on the entire national capital region. Ashmit Kumar, who was at the Supreme Court, is here with more. Ashmit, take us through the measures.
So the Apex Court, not mincing word, coming out with a multi-pronged attack as far as the pollution menace is concerned. And there are essentially 5 takeaways from the order today that came out earlier. The first and perhaps the biggest takeaway is that the Supreme Court is insisting on a ban on registration of diesel cars in the national capital. The threshold, as we had reported yesterday, has been set for diesel cars with an engine capacity of higher than 2000 cc. Now, what's important to point out is that this is effective immediately, and this will go on. The ban on registration of diesel cars in excess of 2000 cc will go on till 31st of March 2016. That's the first takeaway. The second point is that the Supreme Court has continued with its push for cabs applying within the city limits, and this also applies to aggregators such as Ola and Uber, for these cabs to migrate from diesel to CNG, and that is something that the Supreme Court is insisting on. The deadline again has been set at 31st of March 2016. Point number 3 is that the ECC, the Environment Compensation Charge that had been levied in the month of October by the Apex Court itself, has now been reformed, has now been doubled in fact, with the Apex Court now looking to slap an ECC of 1400 and 2600 on trucks that are bound for Delhi that will be entering the city borders. And this is where things get interesting. The Apex Court has again reinforced its order as a part. This is of course the fourth takeaway, but the Apex Court is again insisting, has directed that only and only trucks meant for carrying goods to Delhi that are bound for Delhi will be the ones that will be allowed within city premises, that other trucks will have to find alternate routes or routes of transport, alternate routes of transit. And here's the fifth takeaway, that the Apex Court has clarified that trucks registered prior to 2005 under no condition will be allowed to enter the city border. So again, drastic measures being employed here. We are yet to see the full impact of things, but for now the Supreme Court, not mincing word, putting out a 5-point order to tackle the pollution menace. Back to you.
All right, Ashmit, thank you for that. Now, will this order have a significant impact on the auto sector? Let's ask Sonia Shenoy, who's joining in. Sonia, we saw the pressure on Mahindra & Mahindra. What do the numbers tell us?
Well, this order is very negative for the likes of Mahindra & Mahindra. Most of M&M's products, be it the XUV 500, the Xylo, the Scorpio, all of them have more than 2000 cc engines. And 40% of M&M's standalone revenues comes from the likes of Scorpio and XUV 500. Now remember, Harish Salve did mention that the scope of this order is likely to widen to a national scale. And if this happens, it will be extremely damaging for M&M. Currently, 4% of M&M's sales comes from the Delhi market, so it's not as much of an impact as it would be if it was a nationwide ban. Now, on the flip side, a couple of these commercial vehicle makers like Ashok Leyland and Tata Motors will see a positive impact. That's because there is a ban on diesel commercial vehicles registered prior to 2005 from plying on roads in Delhi, which means that older commercial vehicles will be discarded, giving a push to the replacement demand for some of these makers like Ashok Leyland and Tata Motors.
Thanks for that, Sonia. We have to take a break on that note. But coming up, we will tell you all about other stocks that were in the news today, banks and a whole host of other stocks, as well as a technical check with Sudarshan Sukan.
CNBC TV18, celebrating 16 years of business leadership.